Welcome to Tech Talks, the first word in insurance, a podcast by Hyper-Exponential. Hi, I'm Tom Chamberlain, VP of Customer Consulting at Hyper-Exponential and your host, otherwise known as Tech. I'm delighted to welcome you to the latest episode of Tech Talks. In this episode, we're talking to Sabine VanderLinden, who is CEO and co-founder at Alchemy Crew. So let's get straight into it. To kick us off, Sabine, we recently did a survey to understand insurers' top priorities, and pricing and underwriting, quite naturally, I think, came out at the top, recently overtaking claims and operation transformation as top priorities. So why should insurance companies really care about this, and in particular around the sort of innovation and transformation in pricing and underwriting?
So I believe, Tom, that insurers need to pay more attention to innovation in pricing and underwriting, because we are in the world of artificial intelligence. And when you think about AI, and particularly the past 6 months where generative AI has become much more accessible, right, for people like you and I, well, probably not you, but me, to understand how artificial intelligence can be used in business to improve actions, I don't think insurers have a choice to remain relevant for their customers, to actually deliver highly customer-centric experiences and support the new emerging risk, which are coming up to the market. They need to really innovate in pricing and underwriting. There's no choice. And as you know, I coined a statement, digital or dynamic underwriting, dynamic business models, which requires much more real-time engagement, being able to give pricing, which is aligned to risk. Think about flooding. You need so much data to actually deal with a flooding risk. It's not static anymore, it's dynamic, and therefore innovation needs to take place around the risk assessment process.
Yes, I mean, it's all really interesting. And I'm kind of curious now how InsurTechs are kind of well placed to help disrupt and transform, because as we know, the insurance industry is lagging a little bit in the innovation side and seem to be fairly slow to move. And even then, InsurTechs have been around for quite some time. So I'm just curious to sort of get your thoughts on how they can really help transform, and why now is the time, really.
It's an interesting question, Tom. Why now is the time? As you said, InsurTech has been going on for quite a few years. I fell into insurance in 1997. And now we are into the InsurTech space, and I fell into InsurTech in 2015, actually, Tom. And when you look at our InsurTech market, I think it's very important to place market. Think about fintech. Fintech is around $690 billion in investment received by tech investors. And then InsurTech represents $68 billion in invested dollars by investors. And so it's around 10%. But as you know, fintech has been running for much longer than InsurTech. And I think we had to go through a wave of change. The first one for me was very much around customer experience. A lot of startups focused on driving that customer journey on apps and getting the insurance experience far more digitized. And then we've had now this period where we have been trying to really understand from an infrastructure viewpoint and looking at a much more complex way of doing insurance technology, looking at the infrastructure and how the components fit together, maybe more understanding around API. And, for the past, 3-4 years, we've been around embedded insurance. Mm-hmm. Now, I think for me, it's around the operating model of insurance and making it more dynamic. And insurance companies, brokers, or insurers, I don't think they can do it alone because of the legacy systems. I talked to a few of these insurers, and often they say, we have 200 legacy systems because of M&A. They have hundreds of legacy systems, and they have to deal with those when they're actually trying to build those new experiences. So it's a time for InsurTechs, because partly the one who have understood how to build an infrastructure-led platform or more dynamic capabilities, as you said, around risk assessment, underwriting, leveraging data, external and internal data, combining it together to provide a better outcome. I think it's a moment, a very, very timely moment for InsurTechs, because those who are able to augment the insurance business model and make it more dynamic help the insurance company be more relevant for their customers, whether they are a consumer like you and I, or a customer or client like a commercial lines client. And I think commercial lines, which is much more complex, takes much more time to actually understand the capabilities that are required to make that transformation. And those companies, I think they are not all InsurTechs, right? And I'm sure you would agree with me, where you have a lot of tech relevant for insurance, like cyber, for instance. And I think this is a really relevant moment, because that's the only way we can differentiate, particularly in a market where, capital is scarce and customers are going to find the best deals, which are around.
Yeah, absolutely. And we've seen evidence of this, right? So Convex, who are, I guess, a startup in the insurance world, been going for just about 4 years now. They very much started as a kind of tech-first company. So, and obviously being sort of in a nice position not to have to worry about the legacy side, which you just mentioned, and been able to create everything from scratch. But they really have created a futuristic business model, because they use different tech stacks and they very much embrace that side of things. But they've been able to move quite quickly and grow incredibly rapidly and successfully. And it's a real big lift, I guess, for some of the more embedded insurers who do have all of this huge legacy side. And it is a sort of bit of a burden. And I think you're right. I think InsurTechs and technology companies, data companies, that they can all help with this. But I still feel it's still going slowly. Again, you said you were getting into the InsurTech world sort of 2015, and I think actually we're working at a similar time on companies like Flock, who were doing exactly what you talked about, right? The distribution side, and being able to make insurance much more accessible to consumers. And now, as you said, we're seeing this sort of shift more towards this operational efficiencies and helping out. And do you think there's been a sort of real big leap forward then in that sort of capability side of things? And maybe that's what was holding it back before. It was more maybe more experimental bits and helping out, but now maybe it's a bit more tangible, and you can really see the effects and the benefits it's having. Have you seen that sort of big leap in the last few years?
So I've seen amongst insurers, and I think, let's assume there's around 5,000, main insurance company across the globe. I would say, innovation still remain done by the early adopters. Think about, crossing the chasm, early adopter, fast followers, lag out. I think the adoption is still related and still within the early adopter. And then you have the fast follower who actually want to play catch up, which are going to implement things that they have seen is working across other organizations. And so I do feel that many insurers are trying to do it, and they are learning to collaborate more effectively with startups. But, it's also about culture, internal culture of the business. And this takes forever to change. I remember when I was doing a lot of social economics and looking at social science, which now I think has moved into prompt science, right? What I used to see is that it's all about the culture, and the culture takes time to change. It takes on average 7 years to change a culture, actually, on average. So I think many insurers want to do it, but don't always know how to do it. And when they do it and fail at it, they actually stop their initiatives, whilst actually they should stick to it. Those I've seen succeeding have actually in some way industrialized and democratized specific techniques. And this is the type of things we've been doing with some of them around, creating adoption framework, commercialization framework to enable them to adopt technology and start within their operation. But I don't think it's the masses, actually, Tom. I think it still remains the few because of the risk aversion of the industry, the fear of failure. And so when something doesn't work, they park it, and then you don't know when they are going to go back at it. Whilst, as you know, you're in tech, think about big tech. If they fail, they go back, right? Because for them, it's lesson learned. And I think the industry needs to be better at appreciating lesson learned. Let's not call them failures. lesson learned so that they can actually build much more resilience and responsive business model. And I think that's what we are moving towards, right? We are living in a world where sustainability is top of mind. To do sustainability right, you need to understand your tech stack, but you need to make sure it's green. But also you need to understand what it means for your customer moving from fossil fuel, for instance, to renewable, or what it is to manage environmental risk like flood, wildfire, earthquake, all those environmental stuff that a lot of insurers are looking at, particularly even in the Lloyd's market. And that requires new technologies. It requires new data sets, right? Adding to your existing data set. It requires for your underwriting, your risk assessment to be much more real-time and dynamic. So all this algorithmic stuff that we have heard from Key, Convex, a lot of young players, the one with the greenfield tech environment have been able to implement to serve their customer better. And then looking at what the business model could look like using technology, for example, to do circular. To do circular, you need technology. You need to understand IoT sensors, how you take the data out of the sensors, how you use digital twins to actually understand where a property may be at risk of physical event. All these come together and requires more technology and more detailed assessment, deep assessment to predict and prevent, right? To actually provide the customer with better insight to actually take the right decisions. So a few, I would say, but I think more and more because relevancy becomes much more important, and insurers, if they want to survive and still remain, they would need to start using better tech to serve their customers.
Absolutely. Something you said there really resonated. You backed away from the word failure, but actually, I think it is that it's having the ability to fail fast. As you said, the big tech companies, that's exactly what they do. They work agile, they fail fast and iterate and carry on. Insurance companies tend to do a huge waterfall project, which is going to take 5 years, and then a surprise when it doesn't happen. And then everyone has the fatigue of like, oh, we just can't do that again. And it's this combination of trying to do it themselves. They're not big tech companies. They're not technology companies. Insurers are incredibly good at doing insurance. That's their reason for being. They're there to understand risk. They're not necessarily there to create technology. And I think when you try and bring a couple of those things in together, it can be sometimes a bit of a mess. And don't get me wrong, some companies have done it and done it extremely well, but it is very, very hard to get right. And this fatigue, again, this how long it takes to do transformation is such a huge barrier sometimes. And then you have that added bit, which you said afterwards, which is the culture change. It's all very well embedding this great technology, but if you don't have the culture then to go and use it in the right way, you go and be data driven. Underwriters left to their own devices will continue to do things the way they've always done. And it's served them well in the past. But as you said, they're going to get left behind, and they need to have that mindset change as well as everyone else in the company to go and adopt this technology and do it and do some new things. And those few that you mentioned, they're going to be the ones who are leading the market in the coming years. And as you said, people will be left behind. And I don't know, have you got any sort of tips and tricks, I guess, for insurers sort of listening to this and about how to adopt like things like InsurTechs, because it's not always an easy thing for a company to do. As you said, they're quite risk averse still, and the idea of embedding a small kind of startup-y, scale-up-y type of company can sometimes be a little bit daunting and goes completely against their risk aversion. Well, what would you be saying to those companies?
I guess first I would try to explain to them the dichotomy or the relevance of looking at insurance and InsurTechs as two groups which can overlap. So think about the insurer himself or the company, which is the insurance organization. The corporates can actually provide so many resources for an InsurTech. They may have the willingness to partner and invest. They will have, the global infrastructure and the global reach as well. They have often brand reputation. Things about Lloyd's of London has been in market for 335 years. Things about brands such as, thinking about top of my head, I think Generali is 110 years old. Zurich is 150 years old. So those companies have over years built brand, respect, and a reputation, which is, which is incredible. And so those are important because they are their 4 million of customers, often whether they are corporate customers or individual customers when you think about P&C. They also have core capabilities, and they have been building those core capabilities. I know we talk often about legacy, but think about core capabilities beyond legacy. They have underwriting teams, they have actuary teams, they have claims team, they have experts. And for example, when I think about Travelers in the US as one of the few claim excellence academy, right? They even build academies around their expertise. And then they also have distribution or can access distribution through brokers. So if you start now looking at it as a digital ecosystem, you can link the insurer, the broker, and the reinsurer. And this become as well an interesting digital ecosystem to touch for the InsurTech. Now, for me, the InsurTech and the InsurTech founders, they want to solve a problem. They want to change the world, right? So when they went to build their InsurTech, their goal was to develop a disruptive ideas. And I know in insurance, we don't like the word disruptive. Let's say they want to reinvent our industry.
Transform, yeah.
Transform, right? Reinvent, transform. Disruptive is always a bit tricky. However, they always use the latest technology. And, when I started in InsurTech in 2015, I saw InsurTechs using old stuff, right? But very quickly, they realized the only way they can be called InsurTech was by using the emerging tech, the tech which can transform the industry, the big data, the AI, the blockchain, and the cloud, all those stuff which allows to build really personalized and rich experiences for the customer. Then they also have their own network. Founders like you have connection with other founders and you bounce idea all the time as to where the market is going. And then I think which is important is this entrepreneurial approach where you are able to work with very limited resources. Whilst corporates, there's a lot of waste. I'm sorry, corporates, I love you, but there is a lot of waste. And therefore, because there is a lot of waste, it can take a long time to get things done. And the InsurTech always look for new business model, tend to look for a new business model. That's the goal. They don't always succeed, right? But that's the goal of an InsurTech. So when you have the two overlapping, you can have a really dynamic reaction. And so for successful implementation, you need to have a process. You need to have a framework. And for me, the frameworks start with strategic intent, alignment between the two, but at least for a problem we want to solve. So let's say we want to solve for risk assessment and we want to make it more dynamic. Then we start looking for companies, whether those are data, geospatial, or we look at underwriting capabilities, which are a little bit more dynamic, right? Like what you are doing, hyper exponential. Then we look at the cohort, right? We don't look at one. We look and compare the cohort to see what could be good capabilities to solve the problem the insurer has in place. And then it's about building that evaluation, discovery, and adoption plan. And so that requires a very clear understanding of, do we have a customer? Is that customer going to make money? And what are the capabilities which can solve for the problem, which not always all the capabilities offered by the InsurTech. And I often said to InsurTech, it's fine for you to have all these swanky capabilities, but look at me. I'm insurance company ABC, only need 3 of your 15 capabilities. So you need to put it in my terms, in my ways, so that I can actually talk to my underwriting team, actuary team, if we are looking at an internal user, and then them looking at their own customer to see, okay, these can enable me to manage my portfolio better. These can enable me to find capital easier. These can enable me to serve that customer faster and therefore potentially take customer from our own competitors. And so I would say it's about problem statement, strategy. Then it's about alignment of capabilities. Can we work together? Do we love each other, the culture? And then it will be about the framework, the how we are going to start working together. And, I often said to insurers, you need to have a dichotomy or a double process. You have the one you use with the like of the big guys, right? The IBM, the AWS, the companies who have been proving themselves for many years. But then for tech startups, you need another process. You need another evaluation process, which is faster, which is not going to take 6 months because startups have very limited resources. It has to be done within 3 to 4 months, full stop. And then everybody is happy if it goes for yes or no, but at least no one is wasting resources. And so it's about implementing those capabilities internally, which is often the hardest because you have to do a lot of convincing. And it's never done the first time, right? It's when you interact. Even when I built the acceleration program, first year was very different for second years, which was very different for third year, because you tweak and refine your approach based on the startup and the corporate you're working with.
I couldn't agree more. The alignment piece is really critical. It's interesting that you say you need to have this kind of double approach, one for the big corporate tech companies like the IBMs, and then something different for the InsurTechs. And you have to be, it's quite interesting, you have to be a little bit more used to going a bit more agile, going a little bit quicker with the InsurTechs, because they want to run really, really fast at this. And I do remember talking to a few of the cohorts actually back in the startup bootcamp days, and actually helping this from the other side as well, because InsurTechs, they're expecting things to happen now. And actually, when you send an email to a big corporate, you could probably expect to wait a few days, if not a week, for a reply. And it's not because they're ignoring you; it's just because that's how long things take. And having that alignment on both sides is really important, because otherwise, one or the other side is going to be frustrated. And InsurTechs in particular get constantly annoyed and, why is it going so slowly? Why is this not going? And forgetting that sometimes, no, it has to go to this person before any kind of further decision can be made. And it is a bit tricky. And I think that also probably leads on to, again, corporates they need to have a different approach to doing this. You can't, as you said, you can't have the same approach for a massive tech companies you can for these small ones. The things have got to move quickly. Otherwise, again, you're just wasting time. You'll be left behind. A lot of the transformation the InsurTechs are talking about can be implemented in weeks, if not months, rather than an IBM level transformation. And will take years, right? That's because it's going to be inevitably a huge project. So the ability to move quickly and want to move quickly is key. And again, I think there are some insurance companies out there who are much better than that than others. But it's still interesting to see there is still this barrier sometimes to getting these things over the line. But I really liked how you framed it. It's the problem statement, right? It's understanding what is the problem needed to be solved. Is it underwriters are spending too much time doing data entry? Is it I don't have access to my data in real time? Whatever those might be, and then picking and choosing carefully which of these tech companies, which of these InsurTechs are going to most clearly align to that and be able to deliver what you want, because that's what it is at the end of the day, right? It's solving a pain point and providing a use case for whatever it is you're trying to solve.
John, I wanted to actually share with you and just give you a use case I was solving recently for geospatial. And, we are learning about geospatial, and the problem I was solving for was between flooding and wildfire. And through my learning, I realized that actually you cannot solve wildfire and flooding in the same way, because both are dynamic risk, but flooding is a much more dynamic risk than wildfire, and you need much more data for flooding. And so therefore, the capabilities you identify for one would be very different for the other, because you are looking for, how close you are from the physical risk. And so the population, I would say the cohort of venture would be very different from one to the other. Very, very different actually from one to the other.
Yeah, that's right. Yeah. It's interesting. There are so many use cases out there at the moment, and there's so many of these little spots. It's also a prioritization thing, right, for companies, where what's going to give you the most margin, what's going to help you right now. And I think a lot of companies have been through big process transformation and sort of trying to streamline that, and now it's where can you leverage the best data, the best InsurTechs, if it's geospatial, if it's understanding the data, or again a little more on the operation side, and into things like you mentioned earlier, right? So machine learning and AI, these are big things at the moment, and I know we've been talking about them for some years. And have you seen any sort of good recent examples of sort of from the InsurTech world with machine learning and AI relating to this sort of big corporate and specialty insurance space?
I have, and I think for me, the space which is exciting, as you probably know, is the underwriting and risk assessment space, because there are now a number of players who have been perfectioning their proposition around algorithmic underwriting, dynamic underwriting, or augmented underwriting, because now we also have the European Commission Artificial Intelligence Directive. And so it's not just doing AI. You need to have AI which is explainable, which is transparent, which is responsible, which is trustworthy, all those keywords. And then you also have a human in the loop to actually make sure that we can create some guardrails to make sure we are serving the customer and we are not pushing things which are irrelevant. However, you would not doubt it. Where I'm getting a lot of question at the moment is around generative AI and the usage of it. And I think it's important for people to realize and understand that generative AI is beyond just ChatGPT or GPT-4. There is two other type of, I would say, generative AI. We need to actually be really, we need to understand. We have BERT, which is called, I think, is a bidirectional encoder representation from transformers, right? Very long, mouthy stuff. And then you also have the Transformer XL. And the difference is the Chat GPT is prompt-based. So, you put a prompt and you get an answer. But the Transformer XL is long text. So why I'm mentioning that is because at the moment, I think you have a lot of experimentation in legal tech using generative AI. To actually start looking at comparing contracts or even rewriting contracts, making it simpler. You also have virtual assistant, right? Which can now be much more human using the avatar. And I'm getting my avatar being built, actually, Tom. I'm very excited.
Wow.
But also you have the chatbot. So think about basic chatbot, right? We move from FAQs to chatbot. And now you have the generative AI being able to do the next version of chatbot again, which are far more human. I mean, human in the style of the writing. And I'm not saying the AI is human. I'm saying it's much more human in the style. However, we're still early stage. And so there's so much more to be done. But all this can be used in claims, underwriting, fraud detection. So think about the negative we heard about fraud and cyber. That ChatGPT can create code which actually can create malware. But think about the reverse. ChatGPT also can identify code that can prevent fraud and can actually identify the malware which was created. So, there is an even-ended positive, negative around both sides, but the technology is there now to a point where it will be transformational. Transformational, that's the word. Game-changing. We are at that stage, I think, now.
Yeah, I agree. Actually, I was chatting to someone the other day about ChatGPT and trying to sort of understand that there is still some inherent, I don't want to say dangers, but you've got to be very careful with how it's used, right? You mentioned it earlier, ChatGPT, Bard, whatever, choose your generative AI of choice. There is a low barrier to entry now to use these things. And before, if you wanted to create a machine learning algorithm, this requires a fair amount of skill, certainly beyond sort of my technical capabilities. Some of my team very, very good at that, but there is a lot of design and intelligence put into creating the algorithm, the machine for doing that particular purpose. With generative AI now, it's very easy just to jump in and start asking it questions. And you and I will have grown up with sort of internet sort of strategies where you don't just use Google as a yes/no answer, right? You would never put anything into Google and say, "What is this?" and take the first answer as completely correct.
Yeah.
Right. But with ChatGPT, you can ask it something and it will give you what seems like an incredibly credible answer, unless you are potentially an expert in that sort of field. And there is a bit of a danger here that it's just used as that sort of black box thing, and it can regurgitate a whole lot of bias which the data it's based on. And you need to apply some level of sort of intelligence and expertise over the top of it to make sure that you are not just doing the Google and press yes, that's my first answer. But I don't think there's any way around it, right? It's, as you said, the cat's out of the bag. It's here now, and we've got this going forward.
And we need to continue with it, right? We can't say let's stop, because you are going to have winner and you are going to have loser. Because people, Google, Amazon, or Microsoft with 11 billion into OpenAI, they are not going to stop. And so I think it's very important for everybody to understand it's here to stay. It's going to be there. But as you said, and I play with it, for research, I would say, but I know it's just a draft. It's just helping me think through, okay, instead of taking 3 hours to write an article, now maybe I can write it in 2 hours because it gives me my first outline. And then based on that, I may like it, I may dislike it, but then I can go and do my research and check every single fact. So as you said, you need to be an expert. You need to actually identify the crap which come out of it. And I'm sure if you put your name, Tom Chamberlain, and put mine, Sabine VanderLinden, I look at it, it's like probably 80% right, 20% crap. And so you just need to be mindful that expertise and experience actually probably will be required with this type of capability.
Yeah, absolutely. It's how you use it. There'll be very powerful use cases, as you said, it will help you suddenly take a job which was going to take you a day down to what you just said, 12 hours down to a couple of hours. I've seen people using it as part of their teamwork, and rather than, I did it when I was creating spreadsheets many years ago, and having to like look up how to do suddenly embedded if statements and match index lookups and other things, which like I don't quite remember the sequence of this. And you can go Google it and check, and it'll take you a few hours, but you get it done. ChatGPT can give you the answer just like that, and it just accelerates your ability to do the work. I really like the phrase I came across. I've been telling everyone this. It's you don't need to be worried about being replaced by AI or generative AI, but you may well be replaced by someone who knows how to use it really well.
Correct.
They're
that is probably one I would reuse, Tom. This is absolutely true. Because what you're saying as well is the jobs of the future are changing. And as you know, MIT is making massive investment in prompt engineering and prompt science. And I'm sure other big universities are doing the same. So now when you think about artificial intelligence or our jobs, we have to become good prompt writers. And that is what I realized. Prompt engineering is about learning to write for AI, and it's a skill.
Yeah, absolutely. So do you see this, with all the innovations you're seeing across the market, is it generative AI, is it machine learning, is this going to be the sort of next massive leap forward, or are there other things kind of on the fringe of coming which you've seen which could be equally transformative?
So for me, you have the underlying technology, and I think it still remains in the sphere of data and how you use data. So I think we are going to see more data orchestrators because we have so many data providers. Think about geospatial, there are hundreds of them. And so at some point, and all of them have different layers of it. No one is perfect. So when I took to the geospatial company, they said, they have built coalitions, associations, so that they can actually augment one another, trying to do everything themselves, which I think is superb, because even from an insurance viewpoint, you need an orchestrator. You cannot just take one generative AI company's data to do the job. You need multiple, and actually it's expensive. So then I think it's going to be then about the business model and the pricing model. So if everybody using this geospatial data, then it becomes lower. So then I think there is something around data, big data, and the future of data, which means geospatial, but digital twins, getting a twin of you, my avatar, but also getting a twin of a building, of a physical asset, and still you and I sitting in our offices to understand where the risk lie, rather than having to travel to this location. So going into a bit more sustainability thinking as well. Then you definitely have the AI, the machine learning, the different models. The large language model is just one of the many. It is a form of machine learning, actually. It is one of them. But I can't even remember all the models, but, random forest and also, and so on and so forth. You have so many different types. And it's why I was mentioning BERT, Chat, or GPT-4 and Transformer XL, because Transformer XL allows you to do long text. And so BERT do comparison, and Chat is a prompt. So based on the problem you are solving for, you need to use a different type of model. Not all are suitable for everything. And so then you have, I think, the DeFi, decentralized finance. I think when you start looking then at the metaverse and Web3, which is coming, and I know it's not linked, Web3 and the metaverse, but when you start looking at the immersive environment, and then you and I doing our work with our digital twin, with our VR glasses into those digital immersive environment where our brain is able to process more information in the way we want to learn. So I don't think it's one technology. I think it's a multitude of them. And why DeFi and blockchain, we are, and don't take me wrong, I love Nigel Walsh, and I really appreciate and respect the companies working for. However, Google, Amazon, big tech owns the world in some ways. DeFi allows us, you and I, to become potentially owners of our own data and the stuff we do. So I think a combination of those can actually lead to interesting outcomes. I don't know what those outcomes are. I will just keep it simple to insurance. Insurance business model with this can be super dynamic, and it will have to be taken in piecemeal. We won't be able to do everything in one go.
For sure. It is genuinely exciting time. I don't think in my sort of career lifetime I've seen anything quite as big coming, or right here now, as this potentially can be. It's going to be groundbreaking, and those companies who find the really good use cases for it, they're going to be the ones, as you said before, they're going to be the winners of this game, and they're going to leave everyone else behind. Interesting stuff. So, Sabine, I've got one last question, which I'm asking to everyone, and maybe if we take sort of generative AI out of the equation, what do you think insurers, reinsurers, MGAs need to be doing now to prepare for what? Well, I hope there isn't going to be a soft market, but inevitability means that there may well be. But what should they be doing to prepare for a potential soft market?
So, at the beginning of the year, I was talking to the deputy editor of the FT on a podcast. And she was saying to me, Sabine, I was doing a trend podcast with her. She said, Sabine, the biggest things which are going to affect 2023 will be operational efficiency. Everyone will be looking at operational efficiencies. So I think the technology which is available right now, and I've heard it even this week again, can actually take percentage points out of the business from an operational efficiency viewpoint. Not 2, 3, 5%, it goes into 20%, which I thought was fascinating when you start implementing with the technology we talked about, taking out the generative AI, partly artificial intelligence. Think about cyber fraud, claims, underwriting, so on and so forth. I think it will allow the market to look at a much more diversified portfolio, better understand what is making profit, what is making a loss coming out of specific classes, and actually entering new classes. Because of the transparency of data, they can make better decisions. And I think the part around decision making will improve more and more, and we'll be able to make it much faster as well. And then it's all about, I think, the customer, the consumer, and the client, being able to enable them to understand better why they are being insured, against which risk, and why the premium is X for that risk. Because then you can actually even provide a dashboard for them to actually understand the risk profile. I've seen that in supply chain management. I've seen it in physical risk evaluation, where, you have a flood, you have a hurricane, and you can see around the supply chain or where the properties are, what is going to be affected and what is going to be the impact on the revenue of those companies. So maybe we are going to see more innovation around business interruption insurance. This type of or cloud outage, this type of insurance which are paying out when something happened, like an event where, parametrics is really placed for that. And as we get more data, we may actually see more parametric propositions as well. So I think for me, that is what insurers, reinsurers, MGA need to think about. At the same time, there is a risk, right? There are buyers, and we still need to remember there is a regulator, and we need to serve the customer and apply the right conduct. We need to make sure we look at data. I mentioned the ECAI directive, so this is going to be top of mind. Beyond GDPR, data issues, privacy, security, all this will heighten over the years, not just next year, but over the years. And then, I wish everybody could be a Convex or a Key and come up with a greenfield business model, but we need to deal with legacy as well. And so how can we do that better? Do we need to build layers, more APIs? There's a lot of interesting things which need to be done to bring insurance to the 21st century.
Yeah, absolutely. Yeah, it's what we were talking about, right? You need to start making these changes now, because there are the ones who have already started off on that journey. There's ones who are well into it, and you definitely do not want to be left behind in a soft market, let alone a hard one. And I really do like the transparency thing is really key. like been able to explain how you've made these data-driven decisions, and for the customer to really understand what is being insured, what's not, and all of that is super important. So yeah, that's really great. So yeah, that draws us to a close. Thank you so much for joining me, Sabine, and I'm very excited to go and find out how you get your own avatar created. I think that's going to be on my weekend list.
Send me an email and we can share the secret.
Oh, awesome. Okay, thank you very much.
My pleasure. Thank you, Tom.
That concludes another episode of Tech Talks. If you enjoyed today's show and want to find out more about the topics discussed, head over to hyperexponential.com to gain access to a range of resources related to this episode. The link is in the description, and of course, wherever you're listening to this podcast, make sure you like, subscribe, and leave us a comment or review. Thanks so much for joining us, and see you next time. Bye.